Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Great to have you back on. Thank you for making time.
Good afternoon.
Well, let's start with Wall Street, where the sell-off continues. The combination of high inflation, a very tight job market, rising rates, and concerns about a slowdown globally. The S&P has now fallen back to where it was in March last year for the first time in a year, now below 4,000 points. Tell us about all this volatility in the global markets.
Yes, if you look at the Wall Street, the sell-off accelerated at the final hours of trading yesterday. If you look at the Dow, it closed down at 653 points below, and also the S&P 500 it closed below 4,000 level, and Nasdaq plunged by 4.3%. Clearly, we have not seen this kind of sell-off in quite a while since the COVID-19 era. In any case, the concern right now is very different. At that time, it was because of the disease-driven uncertainties, but now it is all about how the inflation numbers are coming in very higher, much higher than expected, and also the rate hike that is done by the Fed is much faster than expected, all that resulting into the uncertainty of the economy might be slowing down much faster than it hoped for. Maybe the Fed might be trying to tighten too fast, and they are actually looking for a recession to actually occur. That is the uncertainty that people are looking at. However, though, we don't think that that is the case. But in any case, with the higher interest rate environment, we saw heavy selling on the large cap stocks, particularly tech-driven sectors and high-growth sectors. And also, on top of that, we saw even energy sectors showing a heavy selling pressure because of profit taking. And we did see one of the major value stock, which is Chevron, which was purchased quite heavily by Warren Buffett, the Berkshire Hathaway. It fell by 7% plus. All in all, it seems that the market is not really trusting anything right now. Everybody is going towards the safety asset, but right now there's no safety asset in a sense because if you look at the all the assets, including the bonds, are all showing declining. So the financial markets are quite a bit of turmoil. However, with the inflation number we're expecting tomorrow night, we think that the market can be stabilized in the future.
Well, here in Korea, the KOSPI is now below 2,600 points for the first time since late January. One of the few bright spots today was in food products, retail. The decline today was the same percentage-wise on the KOSDAQ, which got as low as about 830 points, but both indices recovered somewhat by the end of the session. What's the story here domestically?
Yes, it seems that it is quite resilient in a sense that the KOSPI has recovered. At the beginning, with the U.S. news, we saw market falling as much as 2.2%, but it recovered to close at minus 0.55%. Also, the KOSDAQ was much heavier. It did fall during the day by about 3.4% on the low, but actually closed at also same level as minus 0.55%. If you look at the KOSPI as a whole, since the beginning of this year, market fell by close to about 15%. And this is because foreign investors continue to be the net seller of this market. Korea is one of depreciating, foreigners net selling, all causing the volatilities. We did see today the foreign investors selling about 120 billion won of KOSPI, and also in the futures about 560 billion. However, they net purchased the KOSDAQ. As far as the domestic investors, the retailers are continuing to be the net buyers, but the level of the net buying is not that much. And also the foreigners net selling as well as the institutional net sellings are not that much. So all in all, we think that this is a good indicator that the market has recovered since the quite of a plunge that we saw since the beginning of the year. Today was the President Yoon's inaugurations. Due to that, we saw quite a bit of sectors showing quite a bit of interest, particularly semiconductor side. SK Hynix showed quite a bit of a rise. and also Samsung Electronics didn't fall that much either. And we did see Kia Motors showing quite a bit of rise as well. So all in all, we think that there's quite a bit of sectors and particular companies that the government might be focusing on, and that is affecting the overall market trend.
Well, finally, Mr. Yuan, the exchange rate for the Korean won now holding above 12.70 to the dollar. These past few weeks, it's been consistently above almost any point in well over a decade, and the strong dollar affecting currencies around the world, of course. Is this the new normal for the currency? There's a lot of talk of it going up to 1,300. Yes,
we did see before 1,300 territories long before, but I don't think that it's going to be that bad. If you look at the Korean won, it did go up to as high as 1280 level. But if you look at the China and Korea and most of the Asian country with a very strong manufacturing sector, seems to be showing a somewhat of a recovery from the bottoms in terms of the market as well as the currency side. Also, the U.S. dollar's appreciation we saw, it did go up to as high as 104 plus, but now it has come down a bit to about 103, below 104 level. We think that the overall trend should be in the direction where the dollar should be peaking out. Main reason for that is because we are already expecting the inflation to peak out as well. We are expecting inflation numbers to come in at the Wednesday night, and that is expected to fall from 8.5 to 8.1%. And the core inflation start to fall, then we think that rate of interest increase by the Fed is something that we can be expected. And if that happens, then the already appreciated dollar might start to ease out. And if that's the case, then the Korean won also be able to appreciate gradually. We think that we shouldn't be too worried about the currency movement, and we should not be making any decision because of that currency movement in terms of the equity investment. But all in all, we'll see some stabilization in terms of the currency in the future.
Well, we'll have to get back to you later in the week about those inflation numbers. Mr. Yu, we'll have to leave it here for today. Thank you, as always, for making time for us. We appreciate it.
Thank you very much.